Hello fellow traders, I'm coming at you early tonight. I definitely feel a lot better today. I'm liking the action. I like the candlestick formation that took place on the Dow and S&P. I'm going to go over that. I'm still holding strong. I made a comment last night to one of our fellow traders that, I was going to ride a little fluff. I wasn't at the post today, checking it on my phone. I seen it up 50, then it was just down. Some good pressure, and then I seen it down about 30, and then back up. I was liking it before I even got back home. I knew what the candlestick formation was going to look like. I can't believe futures are just diving. We'll see if they keep the pressure on overnight and into tomorrow. I definitely feel better. I'm liking what I'm seeing, everything being upgraded, and everybody's raising, hold to buy. That's a good sign of a top because analysts are forced to do stuff like that. A good book is full of bull. Definitely worth reading. It helps you understand what goes on behind the scenes. Analysts, they're up 3-4 hours before the market. They're calling all these major hedge fund managers. See? Telling them what they're liking. Then they come out right before the bell, when the bell opens, and they're kind of touting it some more. They're salesmen is what they are. And as stocks rise, if they got to buy on something and something's dropping, well, they got to move it to a sell. That's what they got to do. They almost chase it with their recommendations. And something that's been happening a lot, everything, Yahoo, eBay, everything's getting upgraded right now. Price targets raised, and full of bull. Good book. I recommend it, and it definitely explains, the salesman aspect of an analyst. But check this out. Here, let's start over here. I'm going to get into that in a minute. But here's what we got going on. I've talked about it before, the Shooting Star Dojo, reversed up here at the top, okay? Just like down here, I'm showing the July low, we kind of had one. It stalled 2 days before it took off. Remember, the one in March stalled 1 day before it took off. When you're playing individual stocks, they usually just boom, boom, and this candlestick is right here. They're up and running. And this starts right there, okay? I know I've tried to pick this before. I think I was picking it right here, but I even said I don't like it. It's not picture perfect, but it's trying something. We had a little sell-off, and it failed. This one here I like a lot more because we got our upper wick is bigger than our lower wick. That's what you need. Like on the bottom, you need the lower wick bigger than the bigger wick. Okay? This could be it. The 97.94, or the 97.94 I've been talking about, that's our first plunge rebound, and we never hit 10,000. We went down from there. This is it. We even battled the 9,800, went up to, what do we hit, 98.50 today, back down. Volume hung in there. If you kind of look across the board, a lot of leaders had high volume today. And tomorrow's the big, expiration day. A lot of things are happening tomorrow. We'll see. Are they going to stall us and bring it Monday? The way futures are going, it looks like they're just going to dump this thing tomorrow, like they're going to dump it overnight. I'm liking it. I feel a lot better today, you know. I'm sticking with this plan I came up with this week, you know. If we, you know, power higher, I'm clearing everything. I'm gonna play with this 97, 94 area still. But this is something else I wanted to show you. Remember on March 6th, I went off these two bottoms here, coming from, you know, the 87 crash to the 91 crash, pointed right to our, you know, let me line it up, to our March bottom. Okay, also go off the top right there of the 87 to the last little basing right here, points right to where we bounced in the March low. Why I'm showing this? Because see how the trend is? So we probably won't hit the March low. But look how we can pull back to this trend line right now at like the 7,200, 7,500. The longer it takes, the higher this trends right here. And by the time it pulls back at like the end of October, it can just be the 8,000 is our hit. See? And that's where it'll come into play again. What? Really deciding what you're going to do at that point, because when it comes back to this line, if it does, that's power. And if it breaks through that, then you know it ain't holding. And we can go down and test the 72. So this line, I just wanted to bring this up because I haven't really been checking it out, and I wanted to check it out again. We've bounced, we've had some time. It's you know, probably right around 7,200 right now. So the longer this takes to dwindle down, you know, I just wanted to check this while we got this up here, you know. Ironically, our 2,000 high and our last bump right here before our climb. This is about when AIG stopped insuring all those bunk mortgages. It's what's funny, and they got the feds or whoever to let them leverage 40-1 because they had to start holding the junk on their books. See, and I could be wrong on that statement, but it had to do with something with AIG. Finally said enough is enough. They all knew it was bad what they were insuring or whatever, and then everybody took it on their own books. Lehman, the main holder of them, followed by everybody else. And it's funny how if you come off the 2,000 high to that last little bump right there, points to right where we're at too. You know, I'll scoot it down so you can see. Look at that, just right there. Did I think it was gonna go this high? Of course not. I'm confident though right now. I'm confident the time has come for the correction. There's too much fighting, too much resistance right now. It shows. Let's see if they give it to us tomorrow or Monday. Time will tell. Good luck.